Hi everyone, welcome back to Be Rich. It's me Vinod recording remotely from Bangalore, and wanted to get a quick video out to you guys before I get to my work here. And today I wanted to talk about Netflix. I hope you had a wonderful weekend. I hope you're rested, recuperated, and recharged. Yes, we've been having some rains, thankfully, down in Chennai and in Bangalore, which has given us much needed relief from the exhausting heat wave we've been going through. So those of you who are down south, I hope the rains were welcomed. I hope your places are not flooded or you're not in any other problems. That said, Anand had spoken about Netflix in the Money Page video over the weekend, and I thought we will see if we find value in this because the stock has gone through some kind of a sudden renaissance, a revival. And is it justified? Should we be jumping up with joy? Hopefully, by the end of this video, I'll offer you some insight and why maybe you should look at Netflix or why you should avoid Netflix and be cautious with all this said. Where's Netflix currently trading? It's trading at $1,191. I would say the DCF, which is the discounted cash flow, would put it around at 517, while the relative value is at $445. So if you take the average of that, it's around $500 would be the intrinsic value. So when was the last time Netflix was really at value to kind of take these kind of calculations? I would say Netflix was truly in value between 2022 to 2023, when it was trading between $170 to $360, which is a far cry from the $1,191 we are seeing it at. And the funny thing is, most of that has happened in this month of April. From the 2nd of April to now, Netflix is up by almost 25%, while at the same time, we find the S&P 500 struggling to be up by 4%. So there is a lot how Netflix has broken through. Is it because of their numbers? Let me walk you quickly through their numbers, which was for quarter one. Revenue was up 13% year on year to $10 billion. Net income is at almost $2.89 billion. Operating income is at 3.3 billion. If you see ad growth, it's up by 34%, where the subscriber base has gone up to 94 million monthly active users in Netflix. The platform has something known as the Netflix Ad Suite, which has been rolled out in the US and Canada. And they're saying this is going to go global. So all the excitement seems to be around this Netflix Ad Suite too. So what is Netflix Ad Suite? Before Netflix's ads and ad scheduling and the whole ad ecosystem was handled by Microsoft. Now they've got their own in-house ad suite, and it's a fully stacked inventory management and delivery and measurement system. So, as an advertiser or a person who's providing a platform for advertising, you need specific tools, which is known as audience targeting, ad formats to choose the correct ad formats, and performance analytics. So, if you want future people who are going to come and put ads on your platform, you should be able to share analytics of past ads, projection for future ads. So, these analytics are very important. And of course, buying interface. So, if you're a customer who would like to buy ad space on Netflix, having a nice interface, a useful interface is great. So these have been major improvements since they've launched their own ad suite. So why is this important? Well, it's going to enable faster growth, more control for Netflix, more control for advertisers, and they plan to roll this out globally. From being just a streaming giant, Netflix will become a serious player in digital ad is what the investors are hoping for. What are the red flags when you say these things? The red flags mainly is that the valuations are so high. The current PE is at almost 56, and the forward PE is at 44. The price to book is at 21. That means there's a lot of investor confidence in the company that it's going to be doing well going forward. And the PEG ratio is at 1.88, almost 2, which shows it has high valuations looking at its growth. But what is the major issue which will them be facing is content spending. A lot of the content before Netflix used to have was other partners' contents which were featured there, like Disney, Paramount. All of that has gone off. Now, most of the content, I would say all of the content primarily is Netflix owned and Netflix made. Like most of the big programs which we know them for, like Squid Games, is all Netflix owned and their own proprietary. So there's going to be a lot more pressure on margins going forward, where they will have to make sure these kind of content is created and it's there. That means there'll be more pressure on increasing and spreading the subscriber base. So this is where it is standing right now. So, what are the arguments for Netflix from so-called analysts, people who are in the know? What are they saying? Why are they saying Netflix? Well, the main thing is they're saying if you see the stock, it's been surging this whole month by up 25% since April 22nd. And the S&P 500, like I said, is only up 4%. It is immune to tariffs. While all other companies took a beating thanks to the tariffs, Netflix did not suffer this beating due to tariffs because they're completely digital. Even the content which comes to them globally is all digital, and there's very little they can do about all this in terms of tariff. And the track record is great, especially during uncertain times. During the COVID-19 pandemic and all this uncertainty, global uncertainty, Netflix managed to have a proven track record. The argument there being that if the tariffs create disturbances elsewhere, online digital platforms, the disturbance will not be felt. Even if global trade comes to a grinding halt, these kinds of things are beyond global trade's reach. Operating margins from 27% is projected to be at 50% by 2030. And in the long term, the management hopes Netflix by 2030 will become a $1 trillion company and the ad revenue will be doubling this year. Last year it was at 4% or something, and the revenue this year they plan to double it. But as value investors, can we just take this and say, all this is true? So should we just be jumping into Netflix right now? I would say no, that you should be extremely cautious because of the following reasons. First, the future earnings is already discounted at a discount. So meaning what? Whatever prospect of all what they said, which is going to come for Netflix, is already being factored into the cost of Netflix. For them to go up by 25% like this, the market already seems to be jumping with joy, and it seems to have already taken the price to a level where this earnings is assured. I don't think so. Because if you see the PEG ratio, it's at 2 almost, and that offers very limited cushion if this growth suddenly falters. So there's too much optimism around Netflix, is what I feel. And of course, I'd like to leave you with what Warren Buffett famously said. He said, you pay a high price for a cheering consensus. What Buffett is saying is there's too much optimism. Market has gone an exuberant spree as far as Netflix is concerned, especially with the pressure of tariff and tariff related issues. They're looking for somewhere to go park their money and park their funds. And everyone seems to be factoring in all what I just said. The tariffs won't affect them much. Their ad revenue seems to be improving, and their subscriber base is going to improve, for whatever reasons have all been said. And if market is focusing on all the positives alone and not looking at the negatives, and it's taking the price to this level, extraordinary level. So this is what my feeling is too. I would say I would wait and be cautious with Netflix. I would like to hear your opinion. What do you think about Netflix? Do you think Netflix is worth being paying at this kind of a premium where it's already at 54 PE ratio, where the PEG is at 2, and looking at all of its earnings? Yes, no doubt about it. Its revenues most of the time has been spot on. Its earnings, except for a 1 year, the rest of the years, if you look at it, has been growing and doing. But is it sustainable at this level? Does it justify this kind of price? Is what the question is. Or is the market already discounted all of this into the pricing? And should you be waiting for a correction for Netflix before you even think of touching it? Would love to hear your opinion. And what else can I talk about? Put it down in the comments down, and maybe I'll pick up a company from your comments and talk about that in the next video. Thanks for watching Village. I hope you had a wonderful day today and you had a wonderful evening, and you're resting, recuperating from driving around in the rains and the floods which might have come from this. Nothing else more to say. See you tomorrow with another video. Good night.